All right, everyone, here we are with ticker symbol SRNE, Sorrento Therapeutics Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So today, the bulls definitely dominated this one, broke through resistance, reached the highs here of about 1087, 1086, dropped again, and almost broke back down below the 50-day moving average to these lows of 1036, and quickly came back up and got themselves out of bearish territory into bullish territory. So they broke through resistance and broke through the 50-day moving average. But right now, if we look at the chart from this perspective, it has been in a bullish run, and now we fell into a bearish run, and this is a slight recovery. But when we zoom out and we look at Sorrento from the bigger picture in the last month or two, is that it reached the highs of $20 and some change. From that point forward, it has been in a bearish run, and it reached lows here of about $5.70, $5.80, somewhere around that area, and that was the lowest point of the bearish run. Very important, because from that point forward, there has been a recovery. Now, it's been very volatile. It jumps up, levels off, jumps up, and it falls. And now it had a bullish run, reaching newer highs of 1212, 1220, 1216 in that area. And now we are in a slight bearish run that it had. It reached these lows here, which was our support level to look at 1013. And from that point forward, it's actually been in a recovery. So this stock, when we look at it outwards, it's been in a healthy bullish run of upward direction, and it's working its way up to newer highs every time it can. And then obviously profit taking and uncertainty gets some people out of the market for this one, and they're just riding these waves. But if you start here and you're ending up here, we're already 100% almost return on investment for anybody that's been in since 577 to this point. So if you look at it from that perspective, this has been in a bullish run, and the potential is there to continue to rise as long as good news continues to roll out, and the innovation and also technology that Sorrento Therapeutics is trying to form and do to continue to progress and move forward in a good way, right? So Sorrento has potential here. So let's move our resistance levels to their new location. I'm going to go ahead and base it off of the highest point and one of our lowest points after breaking through the 50-day moving average. Now, I do want to narrow it down a little bit, and we're going to look at it from a broader perspective and a narrowed perspective. So let's look at it broad and narrow. So here we are with the 50-day moving average, super important number at 1064. If that gets crossed in a downward direction, we are now in bearish territory, and as long as the bulls stay above it, we are in bullish territory. As of right now, bulls broke through it, and we are in bullish territory. That's something to just keep in mind, to know which side of the chart we're in and who is dominating this chart and where it could be heading. Now, for the bulls to maintain that control, they have to break through the highest point of the day, and it quickly got rejected from there, and that is our resistance level at 1116. They need to break through it, turn it into a support, and work their way up to newer highs and newer resistance levels based off of what the charts are showing here and what we are seeing. Very important number. Now, the bulls are in bullish territory, even if they were to move sideways, and we do have a closer resistance level at 1106. That can give us a sense of direction of where this is going. So if 1106 does get crossed and could be tested and turn into a support, this could be on its way to 1116. But 1116 is the most important resistance level right now that needs to be turned into a support, and the bulls can continue to break through newer highs and newer resistance levels. Now, on the other hand, we have what the bears want, and the bears want to get as close as they can to the 50-day moving average right now, and that is 1076. That's our support level right here, and that is the first level of support that the bears want to break through to get themselves closer to the 50-day moving average. 1076 is the support level that the bulls don't want to be crossed, and the bears are going to do their best to cross it. Now, you do have that small window between 1076 and 1064, the 50-day moving average, to see the behavior of this stock. Is it moving quickly down? Is it getting closer to the 50-day moving average and this could get crossed and fall into bearish territory? Or are the bulls trying to reappear in this area and bring this one back up? If the bulls do so, they need to bring it back up, but their goal is to break through that resistance level of 1116. So you got to remember that and keep that in mind. But I do want to emphasize that if 1076 gets broken through, pay very close attention to how quickly this is moving to newer lows, or are the bulls trying to reappear and bring this one back up. It's very important to keep that in mind, because even though 1076 gets broken through and you're in bullish territory, the bears are working closer to their goal to cross the 50-day moving average and get this one back into bearish territory and hit newer lows and newer support levels. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to hit the bell. By clicking on the bell, you turn on all notifications to not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button and let me know you watch this video. Well, at the end of this video, that pop-up video, I actually go into deeper detail about the S&P 500 index, and I just want to break it down a little bit to you guys and see what it is that I want you guys to watch. I know I've been saying it in my last couple of videos. Check out the video, and you're like, well, what does that do for me? I'm just looking for the ticker symbol. I want to see the analysis and so forth. Well, this right here is great news for us as investors right now, present day. I know that the Federal Reserve pumps have an effect. A lot of analysis say that, and experts in the future. But right now, in the present, how can you continue to maximize profits? Well, it's been awesome to see the S&P 500 rise the way it has in such a great recovery due to the fact of these pumps. I'm not sure if that trickle effect is already starting to show that these pumps have had an effect where it can actually start going in the other direction, or if this is just due to the fact of the time of the year, people taking profits, the uncertainty that's coming up, or fear, or so forth, right? So that is something that I am already seeing how quickly this is actually fallen. But you can see as it's been falling down that these pumps still have an effect on the market by bringing it up several points. And we're going to go into that in just a moment into detail. But this has been rising up, and it was a great run. It hit highs, and from this point forward, it actually started to fall and it became more turbulent. The volatility has always been there, but these pumps were actually supporting the market on rising up. But we're going to look at the pumps now because this is the state that we're in. We're not in that bullish run anymore. So I'm going to pull this up. These are some of the most recent pumps. This was released right back on the 14th of September, and the next release date is October 14th. So the first one was on the 15th, and we're going to look at that in just a second. The second one was on the 22nd. The third one was on the 29th, and the most recent and upcoming one to be the recent one is 10/6, October 6th. So we're going to look at those dates. So the 15th, this was September 14th. It slightly dipped and it ended off around 33.83, and the next day was the 15th and it rose up to 34.18. That right there is a rise of several points for the S&P 500 index. And again, 21st rising up, and we land on the 22nd. So the day pretty much ended and started here at 32.61, and the end of the run, because then comes the 23rd, the end of the run on the 22nd, which was the date of the next pump, it reached up to 33.21. So again, rose up several points. Now the anticipation here for the next pump and the week that was coming, the end of the week started really strong, started the week strong on Monday, and it started to dip on that Tuesday of the date of the pump. Well, guess what? The pump actually saved it from hitting newer lows and actually created momentum to continue to rise up because it hit 32.28, and before the day ended, it rose up to 33.49. This is actually one of the pumps that I've seen the pump do the least effect in rising it by several points, but I have seen the pump do this before. stop it from going in this direction and rising it back up, creating an attractiveness to the market to bring in obviously more investors and obviously do this effect to bring it up. And then obviously the volatility of the market is normal to be seen like that. So we're anticipating the next one. But what I want to talk about is, what does it mean for us as investors that these points of the index are rising up? Well, if the index of the S&P 500 is rising up several points, that means that it is rising up and there's 500 ticker symbols within it. Some of them, not all of them, are rising up with it. So individual ticker symbols are rising anywhere from 30 cents to up to $3, maybe even more. But I have seen ticker symbols rise on the dates of these rises and these points rising on the index. Individual ticker symbols rise 30 cents to $3 per share. I know that doesn't sound like a lot. It sounds like, oh, well, it's 30 cents. Oh, it's $3. I know it sounds small, but per share, it does add up. And I'm not saying that it guarantees you profits, but profits are profits. And I always say that in all of my videos, especially when I'm talking about this. And this is an opportunity to maximize profits and minimize your losses. I'm just encouraging you guys to check out the video. I go into more detail about it. I just wanted you guys to see with your own eyes the dates of the pumps and what it has done. And if we go back to previously reaching these highs and dipping, this pump of the scheduled dates was rising this up in an upward direction. I mean, here are some notes, and I also had notes here, but I deleted it because I didn't want those notes to go ahead and confuse people in the upcoming pump dates of over here. But something that I find interesting is, yes, on the dates of these pumps, the market was rising up to newer highs, reaching newer levels, and going up to the point that it hit these highs. But on the way down, on the dates that the market is rising several points, I mean, you do see it several times before, okay? That's good. But on the dates of the pumps, it's actually rising. It's actually rising. It's actually leveling off, rising, creating momentum to go to the next level. And it actually rose due to the fact of the anticipation of people knowing that there was probably an upcoming pump. So many investors know about this. A lot of people aren't speaking about it, or they're unaware of it. So I'm here to share with you guys that there's an opportunity to maximize profits and minimize losses. Click on the video, check it out. I go into more detail about it. I hope you find it helpful and informative. And thank you guys so much for watching, and let's make some money.